Hey, it's Jason Pries with Pries Capital. This week's headline: buyers are gaining leverage, and you can see it in three places: more canceled contracts, fewer fresh listings, and a dip in mortgage purchase activity. Put together, that's a market where pricing power is shifting and strategy matters more than ever. We're tracking a rise in single-family deal cancellations across Myrtle Beach. When buyers walk away more often, it usually means they feel less urgency and more negotiating room. They're willing to use inspections, financing, and appraisal gaps to push for concessions, and to cancel if the numbers don't pencil. Locally, two factors amplify this. 1. Payment sensitivity as rates whipsaw weekly, and 2. Cost surprises uncovered during diligence. For sellers, this is a signal to front-load solutions. Pre-inspections, repair quotes, and transparent insurance info reduce renegotiation risk. For buyers and investors, it's a green light to keep contingencies and press for credits rather than price when that preserves financing ratios. The net results are higher fall-throughs equal buyer leverage, and leverage used well becomes real dollars at closing. Fewer fresh listings are hitting the Myrtle Beach market than last year. That matters in two ways. First, the choice narrows for active buyers. So well-priced, turnkey homes still draw attention. Second, with fewer new options appearing each week, age listings become the hunting ground. This is where savvy buyers and investors find value. Properties that miss the first two pricing windows tend to accept meaningful concessions between 30 to 60 days on market. For sellers, shrinking new listing supply isn't a free pass. Buyers are selective and data-driven. Homes that launch clean and hit the right price band still win quickly. Everyone else competes with a growing stock of stale alternatives. The strategy going into Q4 will be pricing the home to the bracket that clears. Don't chase the market down with small slow cuts. Make one decisive adjustment tied to comps and condition. The Mortgage Bankers Association Purchase Index slipped again from 172.7 to 170.6, telling us purchase demand softened week over week. National sentiment flows straight through to Myrtle Beach. When applications dip, absorption slows, days on market lengthen, and the price reduction share rises. Practically, that means motivated sellers must meet the market quickly, and buyers can time mortgage locks tactically. Float when rates ease intra-week, and lock if you've negotiated a credit package you don't want to lose to volatility. For our coastal submarkets, primary homes inland versus second home and investor pockets along the Strand, payment sensitivity is different, but the direction is the same. Softer demand rewards well-qualified buyers and prepared sellers. Expect a negotiation market into late fall unless we get a sustained rate break. This week's bottom line for buyers is your leverage window. Keep inspection and finance contingencies, ask for seller credits on insurance and repairs, and focus on 30 to 60 plus days on market listings for the best terms. If a rate dip appears mid-escrow, lock in the mortgage rate. For sellers, deals are fragile. Win back certainty with pre-inspections, clear insurance docs, and a decisive pricing plan by day 14. If traffic is low, combine a price reset plus credits instead of multiple small cuts. And investors need to work the relist loop for distressed but fixable assets. Negotiate seller-paid buydowns, target value add in inland single-family residences, and maintain a retrade playbook tied to inspection findings. So if you want to turn this data into a clean transaction, our firm will map the moves with you. Call Tina at 843-999-1570 or me at 843-945-0051. Now visit priescapitalrealestate.com to book your free consult and unlock your weekly local dashboard. Let's turn today's leverage into your advantage. That's all for today. I'll see you in the next charts of the week.